right. So I want to present this presentation for the temporary buy-down product. A lot of great questions are going around this one again. So I'm just going to share my screen here real quick so you can kind of see what we're looking at here. And this particular program is pretty awesome. It makes me able to record presentations, and we're getting a lot of questions on this program again. And it's a program that's been around for a while, Kenley. So without further ado, let's start this presentation on the temporary buy-down product. Now, this is a little bit about myself. I've been in this industry for, 20 years. I got my formal education from Liberty University in Lynchburg, Virginia, with my bachelor's and my master's degree. Year over year, ranked within top 1% of mortgage originators nationwide by several publications. Free time, spend time with my wife, two beautiful daughters. I really do all I can to stay as active as I can in taking care of the community. So done a lot of outreach within our communities with the homeless, of course, is abroad as well throughout regions of Kenya, Africa. Now, the thing about American Pacific Mortgages, our kind of note here is to bring people home. We bring people home. It's our core mission to create experiences that matter. And our whole thing is really understanding the importance of every transaction and work hand in hand with real estate professionals to ensure timely, professional, and unsurprising closings, all with the goal of making everybody included in the transaction look great and phenomenal in the eyes of the consumer. Now, the question that we are getting a lot of is, what exactly is a temporary buy-down product? Essentially, what it does is it buys down the interest rate at the beginning of the loan, keeping the payments lower. It is different from using points to buy down rate. Now, points to buy down the rate for life alone is something that talk to your accountant, but a small deduction payments due to reduction rate, buyer, seller, and builder can pay for these points. Now, temporary buy downs essentially buys down the entire rate for the first 2, maybe 3 years on some products. Typically, it's 2% the first year. So if you have a start rate, let's say 7% is an example, that first year is 5, second year is 6. Likewise, if you have a 3-year, it starts at 4, then goes to 5, 6, and then 7% for the term of the loan. Now, this is actually incorrect here. And I'm going to update this slide, but the buyer may not purchase, only seller or builder, but now buyers can actually purchase this. However, the cost is a little bit more if the buyer decides to buy down the rate through a temporary buy down product. Now, here's an example of what things may look like, right? And this is using a 5% rate, but it gives kind of a monthly benefit feature of what things may look like for year 1, 2, and 3. Now, in the slower market, we're seeing a lot of sellers contribute for that temporary buy down, which is actually beneficial, of course, to buyers and also the seller who wants to sell the property. Now, what's the benefit to the buyer? Of course, simple, lowers the monthly payments for that first year, right? And second year. Frees up cash flow for upfront expenses. We know that there are moving expenses, home improvements, furniture, something were to go away with the property, making sure there's a nest egg or safety net there. Another option here, of course, is knowing for a higher earning capacity. If you're a career job and there's the anticipation of increased earnings, it does help with that, right? Obviously, because of the improved cash flow. Now, what's it benefit to the seller or the builder? It revives a stale listing. So if you have a property that's listed for X number of days or days on market is increased, as we know the norm or the average is still 21 to 30, but let's say you have something for 40 days or more. This can certainly help without lowering the list price. It gets buyers off the fence faster in a changing market or a volatile market. This definitely can help. And then, of course, there's also this option here, something to note. It's a smaller cost and offering discount points with a bigger short-term benefit. Allows buyers of new build properties to pay for upgrades. So if they want to do upgrades on the property, of course, increases that margin potential as well. And then it gives the buyers incentive to buy now rather than wait. And we know that in this market with such a huge amount of demand and a limited supply, this is something we're all kind of watching very closely, because we know that when things improve, a lot of buyers will jump off the fence and it'll probably cause market appreciation and appreciation to go up very quickly. Any questions on the product, or if you'd like to see more breakdowns on this particular program, I do have more analysis and things I created through a program called Mortgage Coach. So certainly let me know. I'm always here. So definitely let me know if you need anything, any questions, whatever it might be. I want to be a resource for you, and truly hoping you have an amazing day.